We so appreciate Mr. McHenry's willingness to join us during recess, and he mentioned the activities of the SEC. We now are very pleased to welcome the SEC. Mark Flannery is the, yes, let's clap now, but let's also bring up the panel. Mark Flannery is the new chief economist as of 3.5 weeks ago, I believe it is, the new chief economist and director of the Division of Economic and Risk Analysis. To introduce the panel, I'm excited to welcome Vasant Thatham from DataTrax, our panel sponsor, and one of the companies that is helping to lead the open data revolution for SEC reporting. Vasant, take it away.
Thank you. Good afternoon, everyone. DataTrax is a leading player in XBRL and open data services worldwide. We service thousands of companies in USA, UK, and several other countries in preparing data for XBRL. We believe the aggregation of data and analysis by the government will result in 3 major benefits: transparency in public life and reinforcement of democracy, informed decision-making by investors, and more importantly, leveling the playing field between those who can buy expensive data and those who cannot. We support the coalition's initiative and look forward to working with various stakeholders in having cost-effective solutions which will make the transparency work. With that, I welcome Mr. Mark J. Flannery, the chief economist at the SEC, and Theo from the Wall Street Journal to moderate the discussion. Thank you.
Well, thank you very much, and thank you for giving me the opportunity to talk today about these important issues. This is something new to me. I've got to give a disclaimer and emphasize that my remarks are mine alone and don't reflect either the Commission's or the staff of the Commission's opinions necessarily. I also want to emphasize, as was already said, that I'm kind of new at this. It's not quite 3.5 weeks. It's 3 weeks and 2 days, but who's counting? So I'm new to a lot of these issues, but I'm not new to the importance of data. I had a fairly long academic career where I've done a lot of research on financial intermediation and corporate finance functions, and all of those relied on the availability of usable information that was readily understandable outside the people who collected it. And today, that's what I'd like to speak about. I'd like to speak about the Commission's efforts to expand the public's access to the financial data submitted to the SEC by market participants. I've got several messages, but the most important one is that it's already become evident to me in my 3 weeks that the Commission and its staff have a pretty sophisticated understanding of structured data and of the use of structured data. Now, I'm saying structured data here rather than XBRL or XML because the staff have a fairly articulated view of what the reporting requirements need to be in specific in order to make the structured data most useful. And making usable data available to the public is a key purpose for many of the Commission's disclosure rules. It's also one of the strategies identified in the Commission's strategic plan, making more data available to the public on cheaper terms. But it's not just the public who uses this data. The Commission staff are huge consumers of the structured data. And that's particularly true in the Division of Economic and Risk Analysis, or DERA, which I head as director as well as being chief economist. We use financial data from a variety of sources in our economic analysis of rules, our economic analysis of risk assessments and market supervision initiatives. We want to know what's going on out there and what would be the changes imposed by a rule under consideration, and how costly are those changes. We also rely on financial data to support enforcement actions and compliance programs. So DERA's extensive use of structured data has enhanced our understanding of the best methods and practices for its collection. Now, at the Commission, the most notable and frequently referenced data is coming from disclosures from the forms and filings required under the SEC's reporting rules. But we also use structured data from commercial vendors. We use structured data produced by self-regulatory organizations, for example, FINRA, or obtained due to our supervisory authority as part of our examinations and investigations. We believe that all of these sources of data are vital to the agency's mission-critical activities. So let me begin by providing just a little bit of history about the accessibility and usability of information on financial market participants. You probably all heard, I'm sure you've all heard of EDGAR. It would be interesting to know how many people know what EDGAR stands for, because we had to check in order to write this speech. It stands for the Electronic Data Gathering, Analysis, and Retrieval, and fully phased in for the periodic reports, the Ks and Qs, of corporate issuers by 1996. And since then, a large number of new financial disclosures have made their way onto the EDGAR platform, including disclosures from investment advisors and investment companies. Now, as the Congressman suggested, I think it's very reasonable to claim that EDGAR has made a huge difference in the availability of financially disclosed information across all categories of investors and analysts. With the establishment of EDGAR, information on the public companies was simultaneously available to all market participants in a common form. It was no longer necessary to have somebody physically resident to pick up the paper copy. It was no longer necessary to wait through the mails in order to get the paper copy, but everybody would have financial reports equally and available to them at the same time, provided that they have a web browser. Now, EDGAR is still running strong today, and you might think that it's an outdated mode of disclosure. Yet its broad reach and its egalitarianism remain important to the process. Data is freely available in real time to all market participants. In fact, during the 4-year period around the financial crisis, market participants accessed 230 million corporate documents through the EDGAR system. So it remains timely. Moreover, countless data vendors have produced robust business models, again, as the Congressman said, around structuring these disclosures for commercial purposes. Some of these business models have the effect of further improving and broadening the access of all investors to these data. So think about Google and Yahoo Finance, which is where, until recently, I got all of my financial information. So we're not giving up on EDGAR, but we're modernizing it. And recently, this modernization has taken several forms. Perhaps the most important has been to structure the information provided on companies' reports in a machine-readable format that enhances the usability of the disclosures. More than a decade ago, this effort began with Forms 3, 4, and 5, when they were required to be filed in a custom implementation of XML. And what are Forms 3, 4, and 5? These are the forms that corporate insiders file to report changes in their ownership of the firms for which they work. So each form was assigned a set of predefined tags that described how content will appear in the browser. The tags can be used to identify and extract the financial elements from each filing, and that data can then be incorporated into a database of similar filings. In 2008, the Commission added Form D reports to this XML format. Form D reports information about unregistered offerings in the securities markets. They're private offerings. In recent years, they've accounted for about $1 trillion of new capital, but the median size of these transactions is $1 million. So half of them are below $1 million, strongly suggesting the importance of these Reg D exemptions to small companies' capital raising efforts. As a result of standardizing the information from Reg D exemption forms, anybody can now extract the machine-readable information and track aggregated private offering activities. Commission staff white papers available on the web have used this information to highlight and understand the nature of this remarkable segment of our financial markets, the unregistered part. Now, in 2009, the Commission began to require that companies provide their financial statements in XBRL. In particular, XBRL, as you know, allows financial information to be structured according to a taxonomy that follows agreed-upon standards, for example, US GAAP. XBRL appears today in more than 20 US forms, each with its own specific taxonomy. So there's a lot of digitalization and a lot of standardization on the EDGAR website. For example, the Commission's rules requiring operating companies to submit files containing tagged data using XBRL for quarterly and annual financial statements. Those rules include both footnotes and schedules as well as the face financials. Mutual funds also file their quarterly 13F filings in an XML format that can be accessed. I remember some time ago I found out about 13F filings and found that there was a very clunky way to find out who was reporting the ownership of which stocks, and now it's very easy to get that information because of the structured data. Now, evaluating the appropriateness of machine-readable formats for disclosure has become an important part of the rulemaking process. DERA staff work closely with the Commission's rule-writing divisions and the Office of Information Technology, and within DERA, we have an Office of Structured Data. The Commission has incorporated the collection of structured data into several recently adopted proposed rules. One example is Reg AB, which I think this happened since I've been there, so I'll say in the last 3 weeks, the Commission revised Reg AB to say that anybody who is issuing to the public asset-backed securities must provide, 3 days in advance of the marketing, must provide machine-readable data on the characteristics of the underlying securities. Now, you might not all know what asset-backed securities are. This is a mortgage pool, for example, or a pool of credit cards, or a pool of commercial loans, which are put together and then by an arranger, and the arranger sells claims, asset-backed securities, secured by that portfolio. In the crisis, there were stories about people madly bidding for residential mortgage-backed securities without having any idea what the characteristics of the securities were underlying the asset backs that they were buying. Why they did that, I find an interesting question, but they don't have to do it anymore going forward because they'll be able to perform their own quantitative analysis on the data describing the underlying assets, and that'll help them decide what to pay for the asset-backed security claims. Another recent example relates to money market funds. The past 3 years, these money market funds have been required to disclose their portfolios monthly on Form NMFP in a structured way. A third recent example is the proposed new rules governing crowdfunding and amendments to Regulation A. These rules, should they be adopted, would require issuers to file certain key financial information in an XML format. Now, following up again on something the Congressman said, if the Commission routinely goes out and requests comments on various aspects of new rules, and it may be surprising to you, it was moderately surprising to me, that the Commission staff and the Commissioners take these comments very seriously. So if you have an opinion about a rule, you have an expertise about a rule that you think might be relevant, we would welcome having you file a formal comment letter. And certainly there are people in my division and elsewhere who can help you find the way to do that. But please think of yourselves as an active part of the process, and one key way for you to do that is through filing comment letters. Now, all of these examples that I've just talked about illustrate that structured data reporting provides easier access for the Commission and investors to key information about security offerings. Structured data also enables easy comparison among available investment options, and this is particularly important for smaller firms. Going forward, I expect the Commission will continue to solicit comment on whether and how to standardize disclosures in its new rules and make them conducive to the collection of structured data. Yet at the same time, we recognize that there are costs associated with different kinds of reporting, with any kind of reporting. And we're not interested in imposing unnecessary costs. So there's a balancing act. And in fact, each rule has, as part of an economic analysis going into the rule, an explicit cost-benefit analysis, where if we don't measure everything down to the nearest nickel, we at least try to consider the pros and cons in an economic context of the particular rule being proposed. So there have been discussions, of course, about how best to capture the required disclosures of SEC registrants. And there have recently been calls to increase the amount of financial information made available. At the same time, there have been calls to reduce the burden of reporting on smaller firms. The further problem is that a lot of the data is low-hanging fruit. A lot of the data is financial data that fits nicely into an XBRL taxonomy, whereas other information in, say, annual reports is textual data. And we've been working to try to figure out ways to capture that textual data in a quantitative way so that it can be analyzed, so we can look for similarities between firms and concentrations of concern about one or another kind of risk within a particular kind of industry. So it's early in the process for this investigation about dealing with the textual data, but we're very hopeful that good progress can be made as we persist. So as a general matter, to maximize the benefits of structured data, the Commission must be mindful of the various trade-offs that exist when incorporating such requirements into rules. The staff must identify not only information to be disclosed, but also the elements of that information that should be tagged to permit external access and combinations through the structured data format. So this requires both anticipating what information would be most useful and the best form of disclosure. Should it be XML, XBRL, something else? Deciding on the right format involves a number of considerations, including the complexity of the information, the need to validate the reported elements, and the availability of pre-existing industry standards and customs. And all of these considerations may be influenced by the information needs of particular financial markets. Furthermore, once we've decided what to ask for and how to ask for it, and that decision comes after careful consideration of public comments, it's important to avoid unnecessary implementation costs. So in 2009, when the Commission first required XBRL financial statements, the standard tools and vendor services available in the private sector for providing these were more limited than they are today. To facilitate a smooth transition to the new rules, the SEC phased in the reporting requirements over 5 years and started with the largest firms and started with the minimally complicated tagging of just the basic financial data. This process was intended to alleviate some of the initial compliance costs, and it also gave private vendors an opportunity to get ahead of the need for reporting in XBRL. So the learning process then was applied to smaller firms as they came along, and that process of learning about how to minimize the cost of compliance is certainly continuing. Now, we've done some recent research about these XBRL filings, and the learning process is illustrated in some ways by this research. So as you probably know, XBRL includes a set of 10,000 tags for US GAAP. Now, filers may use a custom financial element, not one of those 10,000 tags, for one of their financial statement items if they feel that there's not a suitable tag already available. The more frequently filers select a custom tag, however, the less uniform are the data, and the more difficult it is to make broad summary statements about the data that's been filed. So we'd sort of like to have custom tags be more of an exception than the rule, and the Commission staff has recently put on the website, the SEC website, an analysis of the use of custom tags. And what we found is a consistent and gradual decline in the use of custom tags. In other words, a consistent increase in the conformance to the standard taxonomy, which is great news for the usability of the data. Our analysis indicates, though, that smaller firms continue to use custom tags at a relatively high rate. And on top of that, the smaller firms seem to have more calculation errors in their XBRL submissions. So this is not just a result of our research. Analysts in industry and academia have found similar trends among smaller firms' XBRL reports. So what can we do to improve the reporting standards? Well, of course, there are two views. One is the sort of eat your spinach view, which is to be more aggressive about supervision and enforcement. The other view is the exemption view, to say that if smaller firms are having trouble with this, perhaps it's too costly and we shouldn't impose the costs. It seems to me that the Commission has already decided to take an intermediate, prudent position, continuing to monitor filing quality and to educate filers. Time is required for sufficient learning to overcome the inevitable startup problems and the costs that companies incur. It's very encouraging that the large and mid-sized companies are demonstrating continuous improvement, because the smaller companies have been at it for a shorter time, and because they have less resources, it's not really surprising that their compliance with standard tags and their reporting errors are somewhat higher. But help is on the way from the market. For example, in 2009, there were 11 vendors offering products to help companies report in XBRL, and today there are 30. Moreover, the creation of tag data output has resulted in greater automation within the internal reporting processes of companies, and they can interact their internal automation with new vendor products that integrate XBRL tagging. So these vendors' products and offerings continue to improve, their market shares continue to rebalance according to perceived value, and as this happens, we should see tangible benefits among all size filers. Now, moving forward, DERA staff will continue to address the quality of XBRL submissions by periodically analyzing their content for accuracy and completeness. Where appropriate, DERA staff will work with the Division of Corporate Finance, the people in charge of the forms, to provide guidance to filers based on these observations. And this effort will occur through DERA's Office of Structured Disclosure, which I mentioned earlier. Much of the focus will be on how smaller companies are complying with the requirements and assessing whether the quality of their filings has begun to follow the observed trends in quality improvement shown by the larger companies. Helping smaller companies to improve their data quality is important because their ability to disseminate this information in machine-readable form critically enhances their ability to access capital markets. So everybody knows who Google is. Not everybody knows who a $300 million market cap company is, and it's therefore very important for them to have a mechanism for getting out in a reliable and verifiable way information about their operations. So having this information available for all SEC filers, large and small, also helps analysts understand the particular risks that may accrue with smaller firms. These risk estimates increase or improve. They don't increase, they improve with the amount of information available, and that should make capital raising easier for small firms to the extent that they're better understood. There's a fixed cost to get over, but we think that there are long-term benefits from having this source of information more readily available. Ensuring that market participants have access to high-quality information about these smaller companies is an important goal articulated by the Commission starting in 2009 when it required the submission of tagged financial statements. DERA staff are committed to helping fulfill that original goal. So accordingly, you should expect to see more staff observations and updates of filer practices being posted on the SEC website. DERA staff will continue to reach out to corporate filers through seminars, webinars, conferences, educational programs. And the DERA staff are also exploring ways to make aggregated XBRL data available to investors and financial researchers so that they can more easily access and analyze the financial information reported through structured submissions. Finally, DERA is looking at new ways to facilitate the submission and use of structured financial data. For example, DERA staff is working with outside contractors on inline XBRL. Consistent with its name, of course, this new technology allows companies to integrate or embed the XBRL tagging into their financial statements as they are presented in standard HTML format. This effectively eliminates the duplication and error-introducing potential duplication between HTML and XBRL versions of the financial statement data. So we are also proceeding with work on a prototype viewer that would allow users to display and search the integrated XBRL tagging while viewing the familiar HTML view of the financial statements. In short, and in summary, the SEC staff are committed to improving the availability of information through the presentation and analysis of more and better structured data. So let me conclude by thanking you again for this invitation to speak here and thanking you for your attention.
So thanks again. That was some good history, but also some interesting stuff looking forward. And I wanted to latch on to one of those. You talked about the SEC looking at implementing inline XBRL. Is that envisioned as a replacement for the existing system or an alternative? And what would the timeline be if there is one at this point?
To my knowledge, that's an important proviso. To my knowledge, there isn't a distinct timeline, but it is certainly viewed as a replacement for the existing HTML reporting format.
And in addition to the viewer, are there ways in which this would make the internal use of XBRL and presumably by extension external use more valuable? Obviously, getting at errors is one of the
Sure, reducing the error rate, reducing the compliance costs for smaller firms, and providing a more standardized source of data that's more readily understandable across the commission is certainly one of the purposes. And to the extent that we understand it better among ourselves, certainly we want people in the public to be able to understand it better. So through the commission's understanding, it'll get transmitted out. It'll get bug tested and transmitted out to the rest of the public.
Do you anticipate a side-by-side implementation at first, or is this something that
I'm going to have to plead it. I'm too new to know how that's going to work.
We appreciate you being here. So, in addition, one of the other topics you touched on is data quality, as I think a lot of people refer to it, or data variability, and the use of the custom extensions.
Right.
I've talked with people who've been involved in implementing XBRL in other countries, and they, I gather, have learned to some degree from the SEC's experience and have tried to do their best to limit custom tagging. Is that something that, in addition to helping smaller companies get to where larger companies are, is there any interest or any effort to refine how custom tagging works or how it's implemented?
I think first we're going to see how the custom tagging evolves over time as people get more used to the system. This custom tagging is a manifestation of a struggle within accounting about how to summarize information. So if you think of standard GAAP accounting, it's a very strong effort to impose the same reporting standards on all kinds of firms, whether they're mining companies or software companies. There might, however, be something particular to mining companies that makes it important for them to structure their financial disclosure or to disaggregate their financial disclosure differently. So there's this tension between allowing the mining companies, for example, to have some discretion in how they tell their story at the expense of comparability between mining companies and pharmaceutical companies. So this is a struggle that's been going on for a very long time, and it's manifested now in the tagging of XBRL, and I wouldn't want to predict what the final result's going to be, but I know for the near term what we're going to do is try to figure out how much of the custom tagging is really useful to the public and to our own analysis.
You've heard a lot of references, I think, today to HR 5405. You alluded to it when you talked about the two alternatives to cracking down on poor XBRL usage and versus exemptions. What are some things the SEC can do? And you mentioned the potential, but what are some of the concrete steps the SEC can take in the absence of legislation?
Well, for example, we have this Office of Structured Data, which runs a hotline, runs a helpline, fielding questions about how to do XBRL reporting in the context of data being submitted. So there's some help inside the SEC. We also have staff from that office providing seminars and attending meetings like this and talking about some of the issues that they see. And so I guess the near-term goal is to provide increased help. There was a Dear CFO letter that went out from the Division of Corporate Finance recently, highlighting some of the issues or some of the problems around the reporting. And I think for a while we're gonna see what we can learn from that and see how unavoidable some of the reporting errors are, and then figure out what to do, and maybe revisit an issue about exemption and maybe not.
And in terms of the push to include more information under XBRL or under structured data formats, do you anticipate any developments with that?
I do. I mean, as I say, it's very early days, but I'm particularly excited. We had a professor from the University of Maryland visit us for a year named Jerry Hoberg, who did a lot of work trying to categorize the text in the MD&A, Management Discussion and Analysis, and try to characterize it for general themes, try to characterize it for similarity of themes across firms in the same industry. And so I find it particularly fascinating to try to get information about the way people express themselves in those analyses. But it's very early days in that research, and so I wouldn't want to predict when we'll be able to do that, but we will be looking at it.
And is that geared toward internal tools, or might those tools then be made available publicly?
They could certainly be made available publicly eventually. Internally, what we're hoping to use it for is to identify emerging threats, to identify emerging sensitivities or susceptibilities that are common across firms.
Which brings me to another question I wanted to ask you, which is the question about internal use. You mentioned, and this may have been what you were alluding to, but the idea of internal tools that help you zero in on potential problems. Presumably this goes beyond checking the arithmetic.
It does.
Can you talk a little bit about that?
Well, there's a dashboard in place that's being developed further called the Accounting Quality Measure that looks at various accounting characteristics for potential indicators that the accounting is not reflecting exactly what's going on or that there are troubles. One of the things in the accounting literature is that people who do a lot of accrual accounting or an unusual amount of accrual accounting in one year, that oftentimes is correlated with some sort of unreported problem. So we're trying to use that literature from the accounting space to inform the extent to which we allocate resources within corporate finance and looking at particular disclosures.
And is this being done in-house, or is this something that people should be expecting an RFP for?
No, we're developing it in-house at this point.
Okay. I think we have time for just a couple of questions from the audience. No, we don't. Okay, I'm told we have no time for questions from the audience. My apologies.
Never.
Got it wrong both times.
Thank you.
Thank you very much.
Thanks very much.
I appreciate it.
Yeah, thank you.